Friday's non-farm payrolls in the States comes after the Fed chose to raise US rates as expected in December, but with central banks generally now seemingly at an end in their involvement in helping economies with low interest rates, monetary policy now looking as though it may well be overshadowed by government intervention, with the start of a Trump-driven infrastructure spend in the US. How will all this play out in 2017? Well, at the moment, the markets are pricing in 3 interest rate rises in the States in 2017. Now, how important will the US jobs picture be in this, and how important is Friday's number? Well, at the moment, economists are pricing in 175,000 jobs having been found in December, up fractionally from the November reading, but the unemployment rate, which is calculated differently from the raw jobs number, moving up from 4.6 to 4.7% of the US population now unemployed. That's the expectation from Friday's number. The main number, though, for the Fed is how tight the labour market is on wages. Economists are looking for a turnaround from the November reading of a drop of 0.1% to a positive 0.3% reading on average hourly earnings for the month of December. If Donald Trump succeeds in bringing jobs back to America, economists are warning that this could exacerbate the uplift in wages as employers fight for what is already a relatively limited labour force of those with the right skills. So how do you trade this data out on Friday? Clearly it's going to be key, and there are several markets to watch. Let's go first of all to take a look is what's happening in the markets. There's generally a great deal of whipsawing, so the worry is that there is always a possibility of being stopped out. But the dollar index, or the basket, has already been trading at 14-year highs, as you can see here on this chart that we've seen this run up. This is a daily chart showing the lows that we had in May last year, turning around with this spectacular rise recently, which we've seen come through with effect from the point at which Donald Trump was elected back in November. And since then, it's been a trade that's really pretty much gone one way. But arguably already prices in some of the move up on US interest rates. Let's stay with the charts and take a look at another area where there could well be some interest here. Euro dollar. Now, this is very traditionally an area where there is a lot of this whipsawing, and as I said, if you've got tight stops, the chances are you're going to get stopped out on this on an intraday chart. But the general trend has been for a stronger dollar impacting on many currencies around the world, including the euro. The red dotted line at the bottom here is the parity line, which many retain as their longer term pattern. But we've got this long-term downtrend in place here, which is the support line, which is pretty much continuing to follow. And if we see this continue, support will be found at around about the 103.66, but it's currently trading at 104.35, just above the point at which it rests on that line of falling support. So continue to watch this as support. If the number is particularly weak and there is interest in the euro, we could see bids taking up possibly to about the 105.25 level, which is previously the last point of support. Let's look at sterling as well. Another interesting trade potentially. Sterling has been bubbling around this 121.59 level, currently trading at 128.84 a couple of days before the release of the number. And this is definitely going to be the line of support to watch. If, like as I said, it's a weak number, we could see upside for sterling up to potentially this green line here, which is the 50-day moving average, or the blue line, the 100-day moving average, which coincides with this line here, which had previously been support, which could turn resistance at about the 126 level. And finally, I want to take a look at the Wall Street cash, or this is the Dow Jones Industrial Average. If it's a strong number, will this be sufficient to tip it over the 20,000 level? You can see here this multi-year chart. This goes back to 2014 as to how the Dow has moved. And this recent move that we've had on expectations that Donald Trump is going to open the taps when it comes to infrastructure spend. The number of companies there hoping to get a part of that. But could a strong jobs number on Friday tip it over the 20,000 level? If it's a weak number, will it pull back? We've got support here at the green line, the 50-day moving average at 19,300. Let's take a look at some of the opportunities and how to trade that number out on Friday. We are live here on the IG platform at 1:25 p.m. UK time, with a release 5 minutes later, and we'll be taking in some comments from our trading floor and some of the client activity, and also talking to our guest on how all this is likely to impact on future interest rate strategy. So 1:25 live here on the IG platform. Hope you can join us.